Good morning and welcome to Omaha.
On May 2nd, 2026, the investment world's most celebrated annual gathering, the Berkshire Hathaway Shareholders meeting, unfolded once again in Omaha, Nebraska. But this year felt like a true change of the guard. For the first time in 6 decades, Warren Buffett was no longer on the main stage leading the Q&A. In his place sat Greg Abel, Berkshire's new CEO, facing his first published stress test alongside the heads of Berkshire's core subsidiaries. Yet, seated in the front row, the 95-year-old Buffett remained the undisputed center of attention. The morning began with a symbolic jersey retirement, as a jersey bearing number 60 was hoisted into the rafters to honor his tenure. The mood shifted from nostalgia to awe when an AI deepfake of Buffett opened the Q&A session, a stunt that had the room roaring with laughter before Buffett himself warned that such technology is the most dangerous growth industry there is. During the intermission, Buffett sat down with CNBC for a candid interview, explaining why Berkshire is now sitting on a staggering $397 billion in cash, why he views today's volatility as a casino attached to a church, and leaving shareholders with one final, haunting warning about the black swan events yet to come. In this video, we will break down the essential takeaways from the 2026 meeting and what Buffett's massive cash hoard reveals about the stock market's next move. Just 6 minutes into the meeting, the arena witnessed its most poignant moment, a jersey bearing the number 60, marking Buffett's 6 decades at the helm of Berkshire, was slowly hoisted into the rafters of the CHI Health Center. There, it took its place beside jersey number 45, a tribute to his late partner Charlie Munger, who stood by his side for 45 years. As the two banners hung together, the arena erupted in a deafening, sustained standing ovation. In a gesture reserved for the greatest legends of sport, this retirement ceremony immortalized the most iconic partnership in the history of capitalism. Though no longer on stage, Buffett was impossible to ignore. Sitting in the front row, relaxed in a comfortable sweater rather than his usual stiff suit, he looked every bit the contented retiree. Yet, when he picked up the microphone, his presence still commanded the room. He offered a definitive verdict on the leadership transition. This decision has been 100% successful. Later, in his CNBC interview, he elaborated with a glow of pride. Greg is very smart. He has done everything I've done and more, better in every respect. He is simply the right person. After praising Greg Abel, Buffett pivoted to honor another titan in the room, Apple CEO Tim Cook. Buffett recalled that Berkshire once bet roughly 10% of its total assets on a leader the broader world had yet to fully appreciate, stepping into the monumental shadow of Steve Jobs. Cook didn't just preserve a legacy. He propelled Apple to a new stratosphere. Berkshire's initial $35 billion position had blossomed into a staggering $185 billion powerhouse. For the shareholders, the subtext was unmistakable. Do not fear succession. Apple's trajectory over the last decade proves that the right leader doesn't merely protect the past. They pioneer the future. Tim Cook's performance following Steve Jobs, Buffett remarked, is one of the miracles of American business management. He then looked directly at Cook and said simply, Thank you, Tim. As Cook stood to a wave of applause, the moment carried profound weight. Given his recently announced departure, it felt like a final, shared salute between two legends on the same stage. The most unexpected and most thought-provoking moment of the day came at the start of the Q&A session. The lights dimmed. A familiar voice filled the arena.
My name is Warren from Omaha. I've recently undergone let's call it a significant change in role. And I have, well, let's just say a not insignificant portion of my net worth tied up in Berkshire stock. Now, Greg, I've been watching this company for a while, long time, a very long time, and I've been telling people that I have no intention of selling a single share, not one. So my question is a simple one. I'm 95 years old. I've got nothing but time and cherry Coke, and I want to know, just so I have something to tell my fellow shareholders, why should they hold their Berkshire shares for the long term?
The room burst into laughter. Then Abel revealed the truth. It was an AI deepfake, and remarkably, it was created without any direct input from Buffett himself. The voice, the mannerisms, the likeness, all sourced entirely from publicly available material online. The real Buffett, watching from the audience, later admitted that was frightening, especially when there are about 9 countries in the world with nuclear weapons. We are not prepared for any of this. We don't know what's going to happen. A laugh-out-loud opening that carried a sobering warning. As the new CEO, Abel's stance on artificial intelligence was one of the most closely watched topics of the year. He was measured and direct. Berkshire will not chase AI simply because everyone else is. Instead, the company will think critically about where AI can genuinely create value. We'll deploy AI in a focused way, targeting real value creation, he said, while acknowledging that the technology poses significant risks to humanity as a whole, risks that will factor into every decision the company makes. On energy and infrastructure, Abel raised a pivotal point. The explosive demand data centers are placing on power grids represents an enormous growth opportunity for utilities, but the energy cost of hyperscale data centers must be borne by the companies actually consuming that power, not passed on to ordinary ratepayers. This is how a century-old company faces the AI wave. No hype, no panic, just a relentless search for genuine value. The meeting coincided with Berkshire's first quarter 2026 earnings release, and the numbers were striking. Net profit came in at approximately $10.1 billion, more than double the $4.6 billion recorded in the same period last year. Operating profit reached $11.35 billion, up roughly 18% year over year. Abel also laid out his core investment philosophy for the first time with clarity, reaffirming that Apple, American Express, Moody's, and Coca-Cola form the 4 pillars of Berkshire's equity portfolio. Notably, Berkshire was a net seller of equities in Q1, offloading approximately $24 billion worth of stock. Abel also disclosed that he intends to use his entire after-tax annual salary of $15 million to purchase Berkshire shares, and plans to do so every year for as long as he serves as CEO. There is no clearer signal of confidence than that. Berkshire's enormous cash pile remains the market's most burning question. As of the end of Q1 2026, cash reserves climbed to a record $397.4 billion, up from $373 billion at the end of 2025. So why isn't Berkshire deploying it? In his CNBC interview, Buffett was characteristically patient. This is not an ideal environment to be putting money to work, but we have the right management, the right structure. We can wait for the right moment. No one can tell us what we have to do. The truly fat pitches, he said, usually come when nobody else is picking up the phone. That's when Berkshire moves. In 60 years of investing, he reflected, there may have been only 5 moments that truly qualified as extraordinary opportunities. Patience, he reminded us, is the rarest and most valuable skill in investing. Among everything Buffett said this year, his assessment of the current market mood may be the most important warning for every investor to carry with them. He has long described the market as a church with a casino next door, where people are free to wander between the two. Today, he observed, both are more crowded than ever, but the casino's pull has grown far more powerful. He named it plainly. If you are buying and selling one-day options, that is not investing, and it is not speculating. It is pure gambling. The gambling frenzy I see today, he said, is the highest I have witnessed in my entire life. Yet he wasn't despairing. He reminded us that a gambling-obsessed market doesn't make investing itself bad. It simply means that many things are being priced in ways that, looking back, will seem absolutely absurd. This is the clarity of a 95-year-old man who has lived through every bull market and every crash the modern era has produced. Near the close of his CNBC interview, Buffett offered what he called the most important piece of advice he could leave with his shareholders. It had nothing to do with valuation models or portfolio construction. If the whole world could just follow the golden rule, he said, this would be a far better society. The golden rule: treat others the way you wish to be treated. Not an investing formula, not a financial metric. Just the most fundamental truth he still holds after 95 years, beyond all the wealth and all the fame. He has watched too many people turn the stock market into a casino, reducing investing to a pure numbers game. But a truly healthy society, he believes, still depends on something far older than any algorithm: goodwill and trust between human beings. That is worth sitting with for a moment. The final highlight was as light as it was sharp. With the Strait of Hormuz largely closed since the Iran conflict erupted and oil prices surging to 4-year highs, one shareholder posed a pointed question.
The question is, how and when can you offer insurance to ships crossing the Strait of Hormuz?
I mean, the short answer is depends on the price.
Ajit, I like your Charlie answer.
From a jersey rising to the rafters, to an AI doppelganger that startled and delighted in equal measure, from the $185 billion Apple miracle, to a sober warning that today's market resembles a casino more than ever, from $400 billion in cash waiting patiently for the perfect moment, to an old man's final counsel: live by the golden rule. An era completed its most graceful exit here, and quietly, almost imperceptibly, a new one began.